This is an important message for all crypto investors. If you want to continue to make profits in the crypto space and preserve your crypto portfolio, you need to listen to what I'm about to say. In this video, we're going to dive deep into 2 critical mistakes that can absolutely decimate your crypto portfolio, and more importantly, how to avoid them or fix these mistakes. Plus, we'll talk about what's happening in the market right now and how you can position yourself for success and lock in those crypto gains. Hi, I'm Jay, a professor at the Financial Freedom Academy, and my mission is to help you achieve your financial goals and become financially free by teaching you strategies that actually work for building wealth. Let's get started. Have you ever seen those headlines, crypto millionaire made in months, and another crypto crash, investors wiped out? It's a crazy game, right? And while the potential for huge gains is real, so is the risk of losing it all. Many investors fall prey to uncommon pitfalls, turning their dreams of financial freedom into a nightmare. Let's first talk about the 2 critical mistakes that can absolutely kill your crypto investments. Then we'll dive into the current market conditions, what smart money is doing, and what smart money moves you should be considering right now. Look, it's not as easy as just buying low and selling high. Everyone thinks that they can do it, but the fact is, most can't. So let's talk about the first major blunder that can be costing you a fortune. And that's mistake number 1, ignoring the peak. This is where so many investors get burned. Imagine this, you bought Bitcoin at $20,000. It skyrockets to $60,000, then $100,000. You feel like a genius. To the moon, you're shouting with your crypto online community. But then bam, the market corrects, it drops and drops and keeps dropping. Suddenly, your epic gains are vanishing. Panic sets in, you hold on hoping for a miracle, but it just keeps falling. Sound familiar? This is the classic trap. Investors get caught up in the hype, blinded by greed. They think the price will just keep climbing forever. They forget a fundamental rule of investing. What goes up eventually must come down or can slowly correct and come down. Now, ignoring the peak, especially in crypto, is like playing musical chairs and refusing to sit when the music stops. You're setting yourself up for a painful lesson. Now, the solution is to have a plan. Before you even invest a dime, know your target profit levels. Maybe you decide to take 25% of your profits when your investment doubles, another 25% when it triples, and so on. This locks in gains and reduces your risk. Remember, nobody can perfectly time the market. Trying to predict the exact peak is a fool's errand. It's better to take profits gradually on the way up than to hold on for the absolute top and then risk losing everything. Before we go over mistake number 2, let's talk about the current market. We're seeing some indicators that suggest we might be nearing a peak in the near future. No one has a crystal ball, but it's time to be prudent. This isn't a time to be recklessly chasing high-risk altcoins. This is a time to be strategic. As a professor in the Financial Freedom Academy, we help students take significant profits off the table at the right time. We teach you how and when to move a chunk of your portfolio into cash or into stablecoins. This gives you dry powder to capitalize on opportunities when the market corrects. If you're interested, check out the link below to our free Financial Freedom Academy newsletter. Okay. Don't panic and sell everything though. It might be wise to hold some Bitcoin. Bitcoin, as the OG cryptocurrency, has proven its resilience. It's often seen as a safe haven in times of uncertainty. Think of it as your insurance policy against the crypto winter. But remember, diversification is key. So don't put all your eggs in one basket. Okay, let's flip the script and talk about the second fatal mistake. Mistake number 2, missing the bottom and the importance of reinvesting. So just as failing to take profits at the peak can hurt you, so can failing to reinvest near the bottom of a bear market. Imagine the opposite scenario. You sold near the top feeling like a genius. Then the market crashes. You're watching from the sidelines waiting for the perfect moment to buy back in, but the market keeps dropping and fear takes over. You freeze, convinced it will keep going down forever. You miss the bottom entirely, and when the market rebounds, you end up buying back in at a much higher price. The bottom of a bear market is often characterized by fear and pessimism. It's precisely at these times that's the greatest opportunities to buy. Remember Warren Buffett's famous quote, "Be fearful when others are greedy, and greedy when others are fearful. This applies perfectly to crypto. When everyone else is panicking and selling, that's often the best time to be buying. Of course, timing the bottom is impossible. The key is to have a long-term perspective and a strategy for dollar cost averaging, or we call it DCA. So DCA involves investing a fixed amount of money at regular intervals regardless of the price. Now this smooths out the volatility and ensures that you're buying at both high and low prices. Now this is important. A lot of people forget this, but it's a fundamental thing when it comes to investing. Now the crypto market moves fast. Opportunities can appear and disappear in the blink of an eye. That's why it's critical to be proactive and take action. Don't wait for the perfect moment because it will never come. Start by reviewing your portfolio today. Are you happy with your asset allocation? Have you taken enough profits? Do you have a plan for reinvesting? These are questions that you need to answer now. So what I suggest is doing a monthly or even a weekly portfolio review to stay on top of your game. The crypto market is constantly evolving. New projects emerge, regulations change, and the market sentiment can shift dramatically. That's why it's essential to review your crypto portfolio at least once a month. This will allow you to stay on top of your investments, make necessary adjustments, and ensure that you're still on track to achieve your financial goals. A monthly review should include the following: performance analysis. How have your investments performed over the past month? Are there any underperforming assets that you need to reevaluate? Asset allocation. Is your portfolio still aligned with your risk tolerance and investment goals? Do you need to rebalance your holdings? Market research. What are the latest developments in the crypto market? Are there any new trends or opportunities that you should be aware of? Strategy review. Is your overall investment strategy still sound? Do you need to make any adjustments based on market conditions or your personal circumstances? By following these guidelines and avoiding the 2 fatal mistakes discussed in this video, you can significantly increase your chances of success in the crypto market. Remember, investing in crypto is a marathon, not a sprint. It requires patience, discipline, and long-term perspectives. But with the right strategy and a little bit of knowledge, you can navigate the ups and downs of the crypto roller coaster and achieve your financial dreams. So what are your thoughts? Let me know in the comments below. I'd love to hear from you. And thanks for watching, and I'll see you in the next video.